Good morning. Good morning, everyone. We'll start in a couple minutes. Welcome to this quick step event by the Netherlands Czech Chamber of Commerce, transfer prices and their challenges with EKP advisory. I'm Ariane Semradova. For those of you who don't know me yet, I'm the Deputy Director of the Netherlands Czech Chamber of Commerce. And before I introduce our speakers, just a couple of practicalities. All of your microphones should be and have been, but should be muted automatically to avoid any background noise and interference. Of course, if you have any questions during the presentation, you can type it in the chat, and I will make sure either me or my colleagues will make sure that the questions will be answered either during the presentation or just afterwards. Alternatively, you can actually ask it after the presentation directly to Lukáš. If you can't unmute yourself, I will do it myself. And you can ask them directly, vocally. We should finish by 10:30, maybe a little bit later, depending on the interaction. And lastly, the event is being recorded, so it will be shared on individual requests and after the approval of EKP. So a special welcome to our speaker of today, Lukáš Eisenwort. This is not the first quick step we're doing with him. Founding member and executive director of EKP Advisory. So thank you very much for doing it again and again with us. Lukáš is a tax advisor, member of the International Taxation Section and Corporate Income Tax Section of the Chamber of Tax Advisors of the Czech Republic. It is a mouthful. He specializes in income taxes, international taxation, tax and accounting implications of transformations, acquisitions, restructuring, and other corporate changes. You can find all this information on their website. EKP Advisory also has experience in transfer pricing, and this is the theme of today. So I will let Lukáš delve into it, delve into the transfer pricing, its framework, latest developments, and hopefully assist you and help you if you have any questions regarding that. So over to you, Lukáš.
Thank you very much. Nice day to everyone. We have today less than 30 minutes for some brief introduction to transfer pricing, because this is quite a huge theme to be discussed on the tax field. So in these less than 30 minutes, we have time just for the introduction. If you have some further questions, we will be pleased to assist you. We will be pleased to answer all the questions you have on the private discussion or anyhow else. Just feel free to contact us. At the end of the presentation, we will share our contact details so we can stay in touch. So what I've prepared for today, you have 4 points, some initial info concerning transfer prices, but I'm sure that all of you knows the basics of the transfer prices. So this will be just some recapitulation. We will touch briefly the methodology of transfer prices, the 5 basic methods, how the transfer pricing can be handled. We will focus on the most common errors in transfer prices, because that's the topic we like to put up, as many companies got some transfer prices pricing documentation in place, but there are some mistakes or errors in implementing. And last but not least, there will be some invitations for you if you will be interested in some further developments or further details concerning transfer prices. So the initial information, just at one slide. What does it mean, transfer pricing? When there are prices applied in transaction in related parties, I have highlighted the terms which are very important for the field of transfer pricing. So we have to know what is associated enterprises, which are two or more persons which are economically or personally connected. Every country got its own definition. What does it mean, economically or personally connected? In Czech Republic, economical connection is the owning of capital or voting rights more than 25%. And the personal connection means that one or more persons are having control or are the statutory bodies of several companies, and then all of these companies are personally connected. So when such associated enterprises are having transactions, these transactions should be determined on the basis of so-called arm's length principle or arm's length test. This is the test about the price, that the price should be on the market value, let's say briefly. Next to the arm's length test, there are two more tests, benefit test and substance test. The benefit test means that the supply has some value for the customer. It was not obsolete, very briefly. Substance test means that the supply is really realized. It's not just written on the invoice. In case you are from the corporate sector, you can just check whether you really know what does it mean, the management fee or the IT fee or any other, let's say, advisory services provided by the parent companies or by the service centers within your group, because the substance test is really important in these cases when we know really a lot of CFOs which are accepting the invoices for the management fees, and when we are asking them, what does it mean in your company, what did you receive for this management fee, I really don't know. That's the answer in many cases. So be careful when you are receiving such invoices. You have to know and have to be able to prove what is behind, what really did you receive from the provider. The arm's length test means that the price agreed between the related parties, which is another term for the associated enterprises that's the same, must correspond to the arm's length price, or the difference must be satisfactorily explained, which means in case there are some differences between prices internal and external, then you can argue that in internal deals you can have better control for the receivables, for example, better guarantees that your receivables will be paid, which means that you can provide some discount on the sale and so on. So that's the explanation why the prices can vary from the unrelated transaction. But you have to just take in mind that, for example, the volume of the discount has to be at the market level as well. So 90% discount just because the company is within the group is not very good explanation. Okay, move forward. Sorry. The incorrect determination of transfer prices has an impact on profit, of course, and therefore has the impact on the tax base, but VAT as well. And because of this, the transfer pricing got a potential for the tax planning or tax evasion or profit shifting. It doesn't mean profit shifting abroad, but even profit shifting within the country, because when you have got some company with loss and another company with profit, you can try to shift the profit to the company with loss. But of course, this is a type of tax evasion, so be very careful of this. Concerning the cross-border profit shifting means that you are trying to shift profits to countries with lower level of taxation than we have. And so you are trying to decrease the absolute amount of taxes paid worldwide. Because this topic, the transfer pricing topic, is very discussed on the international level, because of the tax havens and other countries with a lower level of taxation. There are several initiatives worldwide which are trying to focus on the transfer pricing and how to control it, how to manage it. The most important are mentioned at the bottom of the slide with the abbreviations. BEPS means Base Erosion and Profit Shifting, which is an OECD initiative. I guess it's in place as from 2018 or 19, like that. And one of the initiatives within this BEPS program is focused on the transfer pricing. OECD has put in place also the OECD guidelines, which are worldwide accepted by the tax authorities. At the level of European Union, we got ATAD, which means Anti-Tax Avoidance Directive, which is the application of BEPS initiative into the environment of European Union. And again, one of the main points of the ATAD directive is the transfer pricing. We got double tax treaties. No matter how old are the double tax treaties, we got some double tax treaties more than 30 years old. But even in these very old double tax treaties, there are still the articles concerning the associated enterprises and how the prices between these associated enterprises should be dealt. In the Czech environment, of course, we got some local legislation, mainly still some remarks in the Corporate Income Tax Act, but there are some non-binding methodology given by the tax authorities, which is really advisable to follow, because all these guidelines, let's say, provided by the tax authorities are based on the OECD guidelines and ATA directive. So we can provide you with more details, but we do not have such time today for this, so just feel free to ask when you have further questions. Concerning the methodology, in transfer pricing area, we got 5 basic methods how to stipulate that the price is at the arm's length principle. The first of them is comparable uncontrolled price. Comparable uncontrolled price, which means that if you are selling some product outside the group, and so you have some external comparable price, and you have some you are selling the same product within the group, then the price should be the same, or you have to be able to explain the differences. That's the case of internal comparable price. There are some cases when there is also an external comparable price, which means that the same product or very similar product is being traded on the market without your presence. So somebody else is trading the same product. So you could follow the price which is on the market and use it also for your internal sales. The second method is the resale price method, which means that the dependent reseller has to have some adequate margin when he is reselling the product which is bought by you. So this is not this method is not looking for the absolute price, just for the margin, and all the other 4 methods are looking for the margin which should be realized in the dependent transaction. The third one is cost plus, which is usually used for the dependent producer. So the producer, manufacturer is not able to stipulate the own price policy because all of the products which is produced within this company is sold within the group. So this manufacturer should have some cost plus. The plus is the margin which is realized by this producer. The profit split method, the fourth one, is used when you got the vertical consolidation of the production and sale process. So you got within the group the producer, the distributor, the retailer, and so on. And so you are able to calculate the whole margin which is realized on all the steps. And there are some methods how to split the total margin to each part of the chain based on the functions and risks which are held by each member of the chain. The last one is the transactional net margin method, which means that for example, if you have some dependent distributor which can just distribute the products of the group on the area of one country, such a distributor doesn't have any other commodities to be traded, so he is totally dependent. He cannot easily trade further products, just the products which are made within the group. Then we have to give some minimum margin to such a distributor, because his market functions are very limited, and the market risks which is bared by this distributor should be handled somehow through the margin. So these are the basic methods. The important issue is that none of these methods are privileged. All of them are acceptable. So when you are preparing some transfer pricing documentation, you have to choose the best for the best methods for your case, and you have to explain why you have chose this method. The most common errors which are made and which we met in our praxis are these 5. So number 1, there's no documentation at all. Well, in Czech Republic, there is no obligatory documentation. We have to say this. There are several countries within the world, and Netherlands is one of them, which has the obligation to have the TP documentation in place. In Czech Republic, it's advisable to have it, but it's not necessary. On the other hand, when there is a tax inspection, tax audit from the tax authority side, you have to be able to prove that your transfer prices within the group are handled correctly, that you are in compliance with all these 3 tests, the arm's length test, benefit test, and substance test. And it's very hard to prove it without the documentation. So it's very advisable to have it, to be prepared, or at least to have some keynotes concerning the TP documentation, to have some methodology, to have some few pages where you describe how you calculate the prices and how you can prove that the prices are fair. Because without these keynotes, there is a risk that you can calculate the price in one case in somehow, and in another case you will calculate it in another way. So there is no compliance between several transfer prices within the group. So at least the keynotes or the whole documentation can help you keep prices calculation and not to have variety of ways how to handle it. The second common error is that the TP documentation does not correspond to reality, which means it's not actual. The function and risk bared by each chain member has been changed from the last update of the documentation. That the market environment has been changed. That's why all the TP documentation should be updated every 2 or 3 years, because when you're calculating some benchmark margin, this margin benchmark is based on the market and you can download it from the databases. But these margins are vary each year, so you have to update the calculation every, as I said, 2 or 3 years to have the benchmark update. Number 3, incorrect search strategy, which means when you are focusing on the benchmark, when you are logging in a database and looking for comparable companies to stipulate which margin should such a company have on its products or on its activities, and you make some mistake within the search strategy, then you got some problems because the strategy you have chosen, it's not the one you should apply. This number 3 is usually bears on the advisors, because the search strategy and the benchmarking is usually done by the advisory company. So, for example, by us. If you will ask us for this, we can guarantee that this will not happen anyhow. But you have to check all the criteria which are made during the benchmark process. Number 4 is application in practice. So you have the transfer pricing documentation, you have the benchmark, you have the correct strategy, everything is updated, but you are not able to calculate the transfer pricing adjustment in the proper way, and you are not able to amend your tax base in a proper way. So it means that all the steps you have made are obsolete, because until the transfer pricing documentation and benchmark is not applied correctly in practice, you are not fulfilling the legislative conditions, and the tax authority can of course calculate some extra taxes for you and input some fines. Last but not least, mistake which is made is the cost base. I can show it on the example of the cost plus method, because as I mentioned, the cost plus is usually used, for example, for the dependent producer, but you have to take in mind that the cost base should be only the costs which are related to the manufacturing process. So it means when the manufacturer have some further activities, some other type of business, and have no cost centers, then the costs related to the other activities are included in the whole manufacturing costs, and you apply the margin on this whole base, then the margin is higher than it should be, because if you would exclude the costs of other activities from the cost base, the absolute margin will be changed, because the cost plus is a percentage of margin applied on the base. If you change the base, then the absolute margin is changed as well, and the absolute profit of the company is changed as well. So you have to take more activities. You should very carefully book all your costs into the cost centers, and of course you have to distribute your, for example, management costs on all the activities in some proper way to calculate the exact amount of the cost base for the manufacturing, including the partial part of management cost, and apply the margin on this base. Otherwise, the absolute margin and the absolute profit will not be calculated properly. Invitations, yeah. If you are more interested in more details about the transfer pricing, let me invite you on our seminar, which will be held on the October 13th in the Czech National Bank. As you can see, it's 5 hours. I guess it's 4 hours plus lunch. And so we will have enough time to go very deeply into this topic. This seminar will be held in Czech. So in case you are able to speak Czech, we will be happy to meet you. For participants of this meeting, we have special 60% discount. You can just scan the QR code, which is on the left side, and you can apply for the discount at this seminar. If you want to stay in touch, you can scan the QR code, which is on the right side, which is my LinkedIn bio. I will be happy to connect with all of you, and I will be happy to provide you with further details, maybe related to your company, especially. Or you can write me an email on my email address. And as a special thanks, we will send you some spicy gift, because we see the transfer prices are spicy as well, and we got this special gifts for our transfer pricing promo. So feel free to write me, and we will send you this box of chili. We have really just 2 or 3 minutes for the discussion. I'm sorry, but the topic is so wide that I'm not able to put it within 30 minutes or maybe 25. So we have just a time for 1 or 2 questions. If you have some, feel free to ask. I'm just trying to look whether we are some questions.
No questions in the chat, but you can. Oh,
we got some.
We got one.
Good morning. I want to ask, what is the common approach to license fees from mother to parent to subsidiary in transfer pricing? How to approach the arm's length principle in particular? Where this were a very specific topic, the license fee or the royalty. At the beginning, I have told that we have to have some substance within the license fee or the royalty. So be very careful when paying some royalty, that you are able to prove that there is also some substance given through the license fee or the royalty. So you can really use for example, the brand of the group, and using of this brand is providing you a benefit. So you can comply also with the benefit test. So first of all, just focus on the substance and benefit, and then how the price should be handled. You can ask some expert to evaluate the benefits given by the brand, and use this evaluation for the license fee. You can check what is the normal or market volume of margin by your competitors without the brand, and what is your profit with using the brands, and the difference should be the license fee. Or there are several other ways how to evaluate the license fee. There are also some royalty databases which is providing some overview what is the level of the royalty or license fee for some trademarks. So you can inspire in these databases, but I would say that you have to be very careful, because the license fees and royalties are one of the most difficult topics within the transfer pricing. So I've just told few ways how this can be handled, but yeah, be very careful with this. Okay, so in case there are no further questions, we'll try to move forward with the presentation. Yeah, thank you for attention, and feel free to contact us in case you have any questions related to transfer pricing or the whole area of accounting and taxes, or we can meet on some further events which will be organized by the Netherlands Czech Chamber.
Yes, exactly. So guys, if you didn't get the chance to see the QR code, or if you need the contacts of Lukasz, please don't hesitate to contact us. My colleague Olga will just will send you by email, but she's also going to put it here in the chat, the evaluation form link. It's a 45-second survey. So if I were you, I would just do it right away so that you have it behind you. And if you answer it, it's just for us to know if you actually like the events and how we can make it better. So if you want the event to be a little better, you have to at least give us a little bit of a feedback. That'd be really appreciated. And we would love to see you physically. So we have two great events coming up. This Friday is Vrijmibo. So it's a more relaxed one drink with the community kind of a thing in Hračanská in Pětistovka restaurant. And then the second event, a bigger one, and I hope to see you all there, is next Tuesday, and it's Prinsjesdag, and it's in the Grobe Villa. It should be a really, really nice event. So yeah, thank you very much for joining us. Thank you so much, Lukasz, for this event. And if you all agree, then we can just send the presentation to whomever needs it. Great. And if you don't have any further question, then I just guess I'll thank you all for joining us, and I hope you all have a great day ahead of you. Thank you so very much.
Thank you.
Bye-bye.
Bye.